Hi, this is Pat Moorhead with Moor Insights Strategy, and we are here for another 6-5 Live. This is our second one. We're trying this out. We're streaming live on LinkedIn, and I am joined here by my world famous on two networks yesterday, I think, Daniel Newman from Futurum Research. How you doing, buddy?
I'm good, but I took off my collared shirt. I had a pink collared shirt on earlier because as much as I want to do the TV and pajamas thing, I just don't have the guts yet. But I can't promise anybody out there that I am, in fact, wearing pants. But no, I'm doing really well, Pat. And it's fun to be back here. I think you'll see a lot more of us when earnings heat up. And of course, when big announcements come up. We've got our regular 6-5 podcast, 6 topics, deep analysis, 5 or so minutes each. Hope you'll tune in and possibly subscribe if Pat drops the link in his LinkedIn live stream here. But we figured this live element is a great way to hit on big punchy topics. This week, we had the AMD Xilinx thing. Check out Pat's stream. You'll see yesterday we talked about it. Last night, Microsoft announced its earnings, and they were tremendous. Really, really good earnings. And after,
wait, Daniel. So are you telling me it wasn't a disaster like SAP? Which I think, what were they down 23%? And there was a lot of this talk that says, oh my gosh, has COVID finally caught up with the software and cloud world?
Yeah. So no, not even close. Now, in fairness, SAP really didn't miss by as much as the 23% drop indicated. But what happened was after sort of a wave of Salesforce, AWS, Microsoft, Google, Facebook, just blowing out earnings, coming up short just isn't going to be tolerated right now. It just isn't. And unfortunately for SAP, it did come up short. I think for SAP, and this isn't an SAP podcast, but just touching on it quickly.
We could make it that.
Its cloud strategy needs to be a little more clear. The CEO turnover has been a bit of a uncertainty creator, and the divestiture of Qualtrics raised a lot of eyebrows. So I think everybody was a little bit on edge with SAP. It's similar to what we've seen with Intel lately. Anything less than perfect is going to be harshly criticized. But Microsoft was another story. So coming into yesterday, Pat, everyone was like, well, SAP didn't do as well. Is Microsoft next? Is this going to be a week? And by the way the market is going, you wouldn't know that anybody's done well. But by the way, everyone that's listening to this, information, entertainment only. We are not providing any sort of financial advice. We just happen to talk about things that maybe are relevant to financial advice. All right. Hey, you want to dig in a little bit? Just chat a little bit about how
let's do this. This is the short version of our full show here. So let's dive right in.
We're not that fast, are we? We like to talk. Hopefully everybody out there's entertained at the very least. So really quickly, like I said, because we like to do the analysis, not the news, but I got to give just a quick background. Revenue, $37.2 billion and earnings of $1.82 a share versus $35.76 and $1.54. So $1.5 billion plus beat. Huge. Let's just talk about double-digit growth in revenue, op income, net income, and earnings per share. So COVID or no COVID, Microsoft is a beneficiary of digital transformation and the acceleration of investments in tech. Pat, there was 3 areas I was looking at closely. Now, there are way more than 3 areas of Microsoft, but I was looking at their intelligent cloud, their productivity business, and what they call more personal, which is basically Xbox and Surface and a few other pieces. Intelligent cloud, 20% growth, but the big number that everyone's paying attention to is Azure, 48% growth, higher than their last quarter at 47% growth, and keeping that trajectory that shows that business is growing. Now, remember, AWS at $10 billion a quarter is growing at around 30%. We'll hear more about that tomorrow, by the way. We'll probably come back and do this again. Productivity, 11%. But one of the areas I'm watching there is how Dynamics 365, the company's cloud-based CRM and customer data platform, 38%, Pat, which is growing at a faster rate than Salesforce, which you've so astutely pointed out to me, Pat, meaning that Microsoft might be taking market share from Salesforce. That's a possibility.
Yeah, it really is, and it's just some back of the envelope stuff. If I look at Salesforce has around 60% market share, and they're only growing 20 to 25%. And if Dynamics 365 is going at 38%, It's just back of the envelope. I'll wait for the number crunchers to get out and prove me right or prove me wrong. But the other thing is when I get on the phone with certain CIOs and they're talking about making some major changes to Sales Cloud, Marketing Cloud, they're looking at one of two companies. They're looking at Microsoft or they're looking at Oracle. Obviously, when people are trying to get out of SAP ERP, they're looking at Oracle. But for CRM, it's definitely Salesforce.
Yeah, so there's a lot to digest there, and I like that back of the napkin, back of the envelope. Imperfect, but definitely brings speculation just based on that market share. Last one, more personal category, Pat. That category only saw 6%, but here's a really interesting thing. Xbox content and services, so the power of gaming and the content side of their gaming business saw 30% growth. And here's the big one, 37% growth for Surface. Now, I've had a hypothesis. You can acknowledge this because I told you this before we did this show, that Surface may be on the trajectory to be the next ultra premium brand above the MacBook in personal computing. My hypothesis isn't just the 37% growth. Surface has been largely quiet about the success it has had, but it's new shapes, it's new forms. You check out this little bad boy, this the Duo, pretty sweet little one. But anyways, dynamic in the products, dynamic in the chipsets, AMD, ARM, and Intel variants that allow a lot of choice. The packaging, everything about the way Surface is being delivered reminds me of Mac, except Windows is no longer a taboo. People are coming up on it. They like it. And with Mac moving away from Intel to its own chipset, ARM, there's nothing wrong with this, but it is going to present challenges. And I believe that first generation not using Intel could have some problems, and that could see defection or attrition that could run straight over, Pat, to Microsoft Surface. So just a little bit of speculation there, but what do you think of that?
So what Surface is doing, and I think the HPs, the Dells, the Lenovo's have very innovative technology. What Microsoft has done is they've added the marketing element to it, where they're essentially going head to head with Apple, with Apple-sized dollars, and marketing matters when it comes here. So, and they own the operating system, and they have a lot of the key apps like Teams and Office and things like that. So, hypothetically, I mean, you put a situation to where they own 100% of the experience. Now, until they got rid of their physical store, they also got control of the buying experience. So we're going to see if them eliminating the retail stores, they can keep that premier buying experience. I think Surface could be a $10 billion business. And at some point, they'll need to be breaking out the profits on that.
Yeah, absolutely. I do look forward to seeing a little more under the hood. It's a thesis right now. It's a hypothesis, you could call it, but it's got legs. It's gaining legs. And I think you made a great point that I'd like to reemphasize. All of the major OEMs building Windows PCs are making some really great products right now. I've been playing with some of the new HP variants, the Lenovo, Yoga with the ACPC 5G chip in it. Very cool. It's the marketing. You're exactly right. The way Surface is being marketed, it's not even, I don't feel like Microsoft is competing with its other Windows-based devices. I really believe it's competing for share in the Mac space. And I think right now, they're the first player that's really completed the packaging in such a way that it could, provide a really meaningful competition to Mac for that small part of the market that Mac has served so well. So maybe let's wrap it up on this, Pat. Going forward, the company basically said it's expecting about 8% growth in the next quarter, a little slower than what the street wanted. And so when I was on Yahoo Finance and I talked to Bloomberg, there were some questions about that, but was essentially, does that mean, and I'll let you go first on this one, But is there a reason for alarm that the company is slowing its growth projections into the next quarter, especially with this being a holiday season quarter coming up?
I think it's the prudent thing to do. First off, Microsoft makes most of its money off of enterprises and government, and they make a little bit on consumer, but they're really a business weighted company. The first COVID challenges, it was really triage. It's how do I get my 50,000 workers who are working inside of a building out, and then everybody scrambled around that to drive revenue. And what they did do is they put some of their digital transformation projects, the big ones that didn't relate to something like self-service, picking up your pizza at the curb with, a license plate detector to know to automatically come out. The other projects were put on hold. And I think they're being conservative, very prudent about it. That is what I think it is. And I also think it's a little bit of a pullback off of triage mode.
Yeah, Pat, I think prudence is the right word. I think these CFOs, these executives are being cautious right now.
Yeah.
It's always better to do better. It's always better to overshoot a little in the end over a slightly lower guidance. Now, I'm not talking about the Salesforce kind of sandbagging guidance where you beat it by 68%, but I'm talking about if it comes in at 10 against 8, I think the street, the customers, the company, it's going to deliver a certain amount of confidence. And right now, that's what the market needs, and that's what the industry needs is confidence that tech is going to continue to be adopted. Listen, I'm going to wrap it, at least my thoughts here, Pat, on this. Microsoft is perfectly positioned to continue to benefit from rapid digital transformation. What happened from COVID has accelerated. The best businesses in the world are making massive technology investments. That's at all the tech, all the layers of cloud, IaaS, PaaS, SaaS. Company has a play there in terms of data, in terms of software, in terms of productivity. We heard the Teams announcement came out, 115 million daily active users, huge growth.
Staggering.
The company is sitting in a really good position right now. I will be surprised if it doesn't hit guidance and doesn't beat guidance, but I actually give credit for being a little bit cautious and letting these next few months play out with all the global turbulence between the election, COVID, and just a general business economic sentiment that has been impacted by both of those things.
Yeah. I was really glad to see Azure have some stability, right? They came in at 47% growth last quarter, which was down from 62% the quarter before, and everybody freaked. But they went from 47% to 48% sequentially, which gives me confidence. Had I saw it dip down to 30%, I think I'd be pressing the alarm buttons at some point. Because at 30%, right, you're talking about a little bit higher growth than, let's say, a VMware or a Red Hat, right? And full public cloud versus hybrid cloud. We do have a comment from Nanzine. Thank you very much. Good analysis there. However, it looks like the next acquisitions and spinoffs that these companies will make really define how the markets swing. Daniel, why don't you take that one?
Well, I think she's made a great point. And as we've seen the consolidation in the chip space, I think there's been a really significant feeling that in tech, the acquisitions and spinoffs are going to be the market makers. We saw IBM make the spinoff announcement of its managed infrastructure services. That drove the price of the stock up as people saw the growth potential of an IBM minus some of the drag coefficient that's been caused by those lagging businesses. And then, of course, we saw NVIDIA and ARM. That was explosive. The ARM deal was paid for by the stock price increase that took place in that day. AMD was, got a more typical response where the acquired company shot up in value while AMD actually took a bit of a hit, knowing it was an all stock deal. But I think the market sees the potential of that deal and the impact that it will have. Microsoft's too big for an acquisition to define it. It would have to be such a massive acquisition, in my opinion, for it to define the success of the next quarter. But of course, the right acquisition at the right time in the right moment can certainly always send send vibes into the market that is going to increase the buy button. Now, Pat, one last thing on this. Microsoft, of all the companies kind of undergoing significant regulatory scrutiny right now, has at this moment avoided that pressure. And I think that's a big reason you're going to see dollars flowing out of other big tech and FANG into Microsoft, because it's hitting its numbers. It's got a good diversified business between commercial and personal. And concurrently, it's out of the crosshairs of most of the regulators at this moment in time, which has got to give people a lot of confidence in the company.
Yeah, if I'm Microsoft, I'm not planning on doing any major acquisitions. And like you said, even the small ones are under scrutiny for reducing competition. Google got called out just for doing that very thing. And I think the likelihood for a spin out for a company like Google is a lot higher. You can imagine Google spinning out its ad tracking business, its end-to-end platform that used to be DoubleClick plus a couple other acquisitions, and separate it from its platform. But I thought it was I thought that was a really good example. So Daniel, we promised to keep this short, but boy, we just don't know when to shut up. Maybe that is what makes us analysts, pundits. I don't know, but I really enjoyed this. I really appreciated you teeing this up. If you liked what you heard, go to one of our YouTube pages, preferably both, and press subscribe for the 6-5 podcast and video cast up there on YouTube. We also distribute this on all major audio platforms as well. So with that, Daniel, it's great to see you, and I'm having fun doing this. Let's do this again.
Let's do this again. Let's do it for Amazon. We'll keep coming back, punchy analysis. And like I said, we hope you'll tune in, subscribe to our show, stick with us. But thanks for being here, and we'll see you later.